Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify, or wherever you listen. It's Wednesday, the 4th of September in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, markets tumble amid renewed concerns over AI and signs of weakness in the US economy.
The US Justice Department looks for evidence of anti-competitive practices by Nvidia as the chipmaker's shares suffer a record-setting rout.
Plus, the risks facing the world's regional lenders. Banking's multi-trillion-dollar weak spot faces a global reckoning. We have a special report.
Let's start with a roundup of our top stories.
Stocks in Asia are slumping by the most since this summer's rout, tracking a tech-led sell-off on Wall Street. The MSCI Asia Pacific Index is down over 2%, with semiconductor stocks including TSMC and SK Hynix tumbling amid renewed concerns over the artificial intelligence frenzy. September is a historically volatile month for stocks. On Tuesday, the S&P 500 shed more than 2%. The Nasdaq closed down 3.2%. The tech index has had its worst start to a September since 2002.
Shares in Nvidia dropped by 9.5%, wiping $279 billion off its value, a record one-day loss for a US stock on Tuesday. As markets in America closed, it emerged that the US Justice Department had sent subpoenas to Nvidia and other companies as it seeks evidence that the chipmaker violated competition laws. Sources tell Bloomberg that officials are concerned that Nvidia is making it harder to switch to other suppliers and penalises buyers that don't exclusively use its AI chips. Our technology reporter Ian King broke that story.
We reported a while ago that there was questionnaires going out, that they were just sort of asking customers, asking competitors, what was going on in the market. The fact that this has gone to the subpoena stage, the legally enforceable request for information, is usually a sign of an escalation.
In response to questions about the probe, Nvidia said that its market dominance stems from the quality of its products, which deliver faster performance. Nvidia shares are now down 14% in 3 sessions since it reported earnings that failed to live up to lofty expectations.
The broad risk-off mood was also driven by a closely watched US manufacturing gauge. The ISM manufacturing activity gauge shrank in August for a 5th month in a row. Timothy Fiore is chair of the survey committee.
We came in a little bit lighter than people thought. We're a little bit better than last month. But if you look at the 3 elements, demand, output, and inputs, the biggest reason for the lack of slowing down even further is the fact that our manufacturing inventory number came up surprisingly.
That's Timothy Fiore from ISM. As the economic picture in the US darkens, the odds of an outsized Fed cut at the September meeting are increasing. Markets are now pricing in a 37% chance of a 50 basis point cut from the Federal Reserve this month. That's up from 32% at the end of last week.
The price of oil is also pushing lower after a loss of almost 5% on Tuesday. The moves come as the possible easing of political unrest in Libya shifted focus back to OPEC Plus's plan to restore production, while demand concerns also persist. But Jeff Curry, Carlyle's chief strategy officer, says that concern is overstated.
The data disappointment was a PMI that was expected to be 49.5 and came out at 49.1. Does that justify the oil market being at a record short? Absolutely not. It's not a collapse that would justify the market being as short today as it was in the global financial crisis of 2008.
Carlyle's Jeff Curry speaking there. Oil has now wiped out all of this year's gains on worries about the economic outlook in China, the world's biggest crude importer. Investors are also watching monthly jobs data due out on Friday that could offer more insights on the Federal Reserve's path forward on US interest rates.
There are increasing concerns about the future of regional and smaller banks as they face risks from higher interest rates, exposure to commercial real estate and shaky economic conditions. Bloomberg's Chris Pitt has more.
The collapse of Silicon Valley Bank last year exposed the risks facing small and medium-sized lenders. But high interest rates and an uncertain economic outlook are adding to regulators' concerns. The European Banking Authority is among the watchdogs that has raised concerns about small lenders' exposure to commercial real estate. Weaker governance and risk management have also been flagged as common issues. It leaves a dilemma for regulators on how to supervise them effectively without overburdening a sector that provides crucial funding to consumers and business. In London, Chris Pitt, Bloomberg Radio.
The German government is planning to cut its stake in Commerzbank after a recent share rally. It currently owns a stake of around 16.5%, which is worth roughly €2.5 billion. Bloomberg understands that the government doesn't intend to sell its entire stake for now, and it's not known when the transaction will take place. Germany joins other European neighbours in offloading shares in banks acquired during the financial crisis after the region's lenders were bolstered by higher interest rates.
Plans to scrap the UK's non-dom tax regime could cost £1 billion a year, according to new data from Oxford Economics. Bloomberg's Tiwa Adebayo has the story.
Back in March, budget officials estimated changes to the way wealthy foreigners pay tax would raise £3 billion a year. Now a new Labour government plans to go even further, subjecting overseas assets to British inheritance tax if the owner has lived here for more than 10 years. But instead of raising money, some researchers say the changes will come at a cost, as those with non-dom status flee the country. A survey by Oxford Economics found over 80% of them are likely to leave because of the measures. The new rules for both foreign income and inheritance tax are due to start in April 2025. In London, Tiwa Adebayo, Bloomberg Radio.
Now, in a moment, we'll bring you more on the market sell-off, plus dig into those concerns over the risks facing smaller and medium-sized lenders in many parts of the world. But first, on a day when we're talking about the huge slumps on stock markets, we did catch the attention of a stock that is doing well, at least perhaps if you look over the year-to-date level. Could it be dubbed the Hello Kitty rally? This is Sanrio, which owns the Hello Kitty brand. Its shares are up 91% this year, despite being down by 1% in a market that's selling off, as we say today. And this is actually part of a broader trend around entertainment companies in Japan, which are seeing their performance very closely linked to the fact that this summer has been very wet with torrential rainstorms and very hot, which means that people don't want to be outside. If you look at the theme park sector, as our colleagues have been doing, when you see the company that operates the Tokyo Disney Resort, which is mostly outdoors, the company that operates that Oriental Land, shares down 25% this year. Sanrio's parks, though, they've two of them in Tokyo, are indoors and they're doing very well. Similarly, for another major company, Round One, that operates arcades and bowling alleys, their shares up 56%. Entertainment companies might need to provide a few umbrellas to try and get more people in the door.
Familiar territory for anyone in London. Well, look, it's also the weird effects and the widespread effects, of course, of the changing climate. No, a really interesting story to pick up on.
Well, let's get back to big moves on markets today. The broad sell-off in Asian equities after we saw AI leader Nvidia suffering that record stock rout on trading on Tuesday. The Nasdaq down 3%. Oil selling off as well. Joining us now, Bloomberg's Kriti Gupta, who's been keeping across all the market developments for us and on Bloomberg Television. Kriti, let's talk about the trigger for this first. Why the Asian stock drop, given that the Nvidia rout was down to an issue quite specific to the business?
Yeah, this feels like a little bit of a continuation of yesterday's trade. And if I can kind of rewind even further past what we're seeing in the Asian session, is that even in yesterday's session, we did start to see even NASDAQ futures ahead of the European pre-market take a leg lower when European markets were actually initially opening in the green. So that already shows that there was a tone set here that when Americans come back for Labor Day, there would be some sort of sell-off. And that's exactly what we saw. Fast forward to the kind of the Asian market playing a little bit of catch up here, because you saw underperformance in the U.S. yesterday as well in this particular sector. Not to this extent, however, and this is where you're starting to see the difference. So, and this is crucial because there's a couple of different factors. Yes, Nvidia is a part of it, and yes, the DOJ antitrust probe is certainly weighing on the stock in terms of sentiment. But historically, when you look at tech stocks, when the DOJ, the FTC, basically any kind of legal American regulatory system does probe a tech company, you don't actually see a big impact in the stock. And the reason for that is a precedent that goes, I'm going to not nerd out too much here, but a precedent that goes back to 1999 when Microsoft was dealing with an antitrust probe and was able to beat all the cases. So the stock would drop in response to all these legal kind of moves from the government, and then Microsoft was able to supersede it. So one of the criticisms of that was you don't trade off of legal drama that can last over, 3 years or more, and 3 years for the case of Microsoft. So there is kind of a underlying current that when there's regulatory action involved from the U.S. on a big tech company, you don't often trade off of it. That being said, there's already been a lot of positioning for a drop in Nvidia to begin with. So that is kind of piling up on top of the reasons. You also got ISM manufacturing data in the States, which came in pretty poorly. Remember, it only makes up about somewhere between 20 to 30% of the American economy. It was already a sector of weakness. It's not a sector of the economy that Jay Powell necessarily cites in some of his reasoning around monetary policy, but it is something to be quite aware of, given that there is concern around that sector.
Yeah, I mean, at Jackson Hole, Powell, seemed to be indicating that a rate cut was coming, but now the debate is around 25 basis points, 50 basis points, and there's so much data, isn't there, between now and when we get the Fed meeting. So the ISM you mentioned, but then also the monthly jobs data on Friday. How much do you think that could add to this kind of risk-off, very jittery mood a couple of weeks ahead of the next Fed meeting?
I mean, I think you're already seeing the jitters actually show up. But remember, seasonality is a factor as well. So there's going to be these jitters between now and the next payroll report, and arguably after as well, because September is a seasonally negative month, and more so in election years. In fact, Renaissance Macro just put out data that September already tends to be quite weak, August as well, but September more so. And then election years, it's almost guaranteed a negative loss when you look at a guide for history. Of course, the famous saying on Wall Street is past performance is never representative of future returns, but markets certainly seem to act that way. But absolutely, you're right that payrolls is important given the sensitivity that the last payrolls number created in the markets.
Just briefly, Critty, on oil prices as well. Big mover yesterday, down 5%. We're looking at further weakness today. I mean, what's the broader significance of that?
This is a big deal in terms of risk sentiment. You're now looking at a 73 handle on Brent crude, but it's also one where you're starting to see geopolitics play a bigger role. Remember, when you see a move somewhere between 4 or 6% on Brent crude, that's the geopolitical premium getting baked in. So what's going on in Libya, Nigeria, it is actually moving the markets.
Yeah, okay, we're going to get to that a bit later on this morning. Critty, thank you so much for being with us. Bloomberg anchor Critty Gupta then on the latest when it comes to the markets moving this morning.
Now we're going to focus in on regional banks, be it Metro Bank here in the UK, Milan's BFF Bank, or the agricultural lender Norinchukin Bank in Japan. They've all been facing stress recently, although there's some concern that these smaller lenders, which are the bedrock of regional economies around the world, could face more turbulence ahead. Joining us now is Bloomberg's senior finance reporter Laura Noonan for more on this story. Laura, good morning. What are the common concerns about these smaller banks?
Yeah, so these banks, there's a vast variety of different kinds of banks that fall below the biggest banks our listeners would be very familiar with. So one of the things is they tend to be more exposed to interest rate changes than some of the larger banks because their business models are less diversified. So when interest rates move, they are more likely to be caught off guard and to take losses. And we saw that there with Silicon Valley. We saw it with the Japanese bank. We're seeing it with other banks. They also tend to be heavily linked to their domestic economies or to their local economies, and in particular to real estate, and in some cases to commercial real estate, which our regular listeners will know has been undergoing a lot of different stresses recently. The other thing is that even though big banks were at the heart of the last financial crisis, regulators still generally tend to think that bigger is better, bigger is safer, and therefore some of the rules which have come in, and they do impose a lot of different burdens on all kinds of banks, they hit smaller banks disproportionately because they just don't have the infrastructure to implement all of these rules in a cost-effective way, so the costs are increasing for them. So those are all kind of headwinds that I think banks below the top tier are facing right across the world.
Laura, in your reporting, you've mentioned a number of recent bank crises that have raised red flags. Can you give us just an example or two?
Sure. So I think there has been a lot of action in Italy. There's been concerns about some of the smaller banks not basically being active enough in recognising loan losses. The Bank of Italy has called them out for that. One of the smaller lenders, BFF, was actually temporarily banned from making shareholder payouts because of that, because they have been classifying bad loans as being not bad loans or good loans. We've also seen India, there's been a number of small banks had to hand back their licenses because they're not making enough money. In the US, I think listeners will be familiar with the struggles with the mid-tier banks there. In the UK last year, we had the issue with the kind of poster child for challenger banks, Metro Bank, which hit a lot of turbulence when it wasn't able to get the regulatory relief that bigger banks have and which it had been betting on. So I think we're seeing a lot of different canaries in the coal mines in different countries and in different regions. And I think that's why regulators are looking at this area more closely.
How are regulators approaching this, Laura? Because it's a concern about obviously regulating these banks correctly, but not overburdening them at the same time.
Yeah, it's a difficult one to straddle because regulators are aware that these banks are the bedrock of many communities. As you say, they do have information that the large banks just don't have because they live and breathe in the communities that they lend to often. So they are cognizant of that. It's also very difficult. It's much easier to properly supervise. So I would say supervise rather than regulate, but you can properly supervise one massive bank much more easily than you can supervise the risk, the governance, the controls of 1,000 smaller banks. So it is genuinely hard.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.